Hey everybody, welcome to Mortgage Today for Tuesday, March 19th, 2024. And oh, what a day it was. UMBS opened the day up 11 basis points in the morning. Stocks were lower this morning after the Bank of Japan officially ended its 12-year era of negative interest rates. Housing starts rose 10.7% month over month and 5.9% year over year to a seasonally adjusted annual rate of 1.521 million units. We continue to see a shift from multifamily to single family. Multifamily starts are down 36% year over year to 377,000, while single family starts rose 35% to 1.13 million. Building permits were up 2.4% year over year to a seasonally adjusted annual rate of 1.52 million units, which is about a third of what we need. We saw a similar shift in single-family homes with a 30% rise in single-family permits and a 33% decline in multifamily. The Fed begins their March FOMC meeting today, and the Fed Fund futures see almost no chance of a rate cut. The June futures are still leaning towards the 25 basis point cut with a 40% chance that the Fed keeps the rates the same. Wall Street Journal journalist Nick Timiraos, who has good contacts at the Fed, thinks the central bank is becoming worried about a recession. While January and February inflation reports were disappointing and the headline employment numbers are good, the world looks a lot different now than it did in July of 2023, the last time it hiked rates. Historically, the Fed has begun cutting rates about 8 months after the last rate hike. It left rates elevated for longer in 2007 in order to prick the real estate bubble. But it looks like this period will go down as the second longest tightening cycle, given that a cut is unlikely this week. Any trading day without a big ticket economic report or Fed announcement faces an uphill battle in the road to relevance. Today was no exception, with only housing starts on the data calendar and the 20-year bond auction, other than the Bank of Japan announcement. The auction was relatively strong and helped facilitate today's modest gains. That said, we were already green before the auction, and the market seemed to simply be avoiding a break of the 4.32 ceiling. That held up quite well now, and we can assume Wednesday's Fed events will either precipitate a clear breakout or bounce. UMBS ended the day up 25 basis points, much needed, ending up at 100.56. So at 100.56, it put us right above that red line, which is the 25-day moving average. We got a couple of floors below it, so hopefully with some good news tomorrow, we can make a run and break above that 50-day moving average. The things we definitely have control of, because it's not the Fed, is our own minds and our wisdom and how we use it to sell things. The fifth agreement. So check out our sponsor at wellthatmakesense.com and dive into the profound insights of the four agreements and the fifth agreement to define the approach in real estate and the mortgage industry. These aren't just principles, they're things that will help you sell more every day.